Hi everyone, welcome back to Corporate Decoder, the place where we decode those corporate documents so you don't have to, and this time we're diving into the exciting world of investment fund reports. Believe me, it's more interesting than doing your taxes. This time we're looking at the Institutional Investment Strategy Fund, and we'll see if their investment strategy is any good or if it's just throwing darts at a board. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more in-depth discussions. Alright, so first up is the annual report for this fund, which covers April of 2024 through March of 2025. Think of this as a yearly checkup for your investment to see how healthy it is. Let's start with the letter to shareholders from Wendy Lee, the Chief Investment Officer at Buena Capital Advisors LLC. The letter states that the Institutional Investment Strategy Fund, which launched in March of 2024, aims to give investors access to an endowment-style portfolio, meaning they're trying to invest like a university A2 during the year, whilst Porter 2020 of NC21 aims to give investors access to investment strategies. Us small individual investors do not. For the fiscal year, the founder class shares, that's 14DX, delivered a net return of $727, net asset value NAV increased from 10.21 to during the year. Digging into the portfolio's makeup as of March, about 40% was in public equities, 21% in private equity, 6% in real estate, with smaller chunks in opportunistic credit and infrastructure. What I notice is that almost 20% is held in cash and fixed income. This is actually great for the fund for flexibility and playing it safe during crazy times. In the market commentary, the CIO points out that the fund's fiscal year saw rising US equity markets initially, but later faced volatility due to global trade policies, central bank uncertainty, and fiscal tightening. Because of the economy's uncertainty, she emphasizes how important it is to diversify assets and select the right investment managers. The fund is set up to navigate uncertainty and find opportunities. Let's look into this table that summarizes the total returns for the period. The founder class shares returned 7% for the year and 9.24% since inception. The investor class NAV since inception, which was December of 2024, is negative 0.16%. The endowment style index, as well as the MSCI index and S&P 500 index, performed better. This is not great. This means the fund underperformed compared to the indexes. Next up, the schedule of investments provides a detailed list of what the fund is holding. It breaks down the investments by category such as common stocks, closed-end funds, business development companies, and so on. Taking a quick look, the fund's top holdings in common stocks include big tech names like Apple, Microsoft, and Nvidia. It seems pretty standard compared to other funds. The fund has significant holdings in private market funds, the Carlyle Alpenbest Private Markets Fund, Hamilton Lane Private Assets Fund, and Variant Alternative Income Fund. The fund has allocated a significant amount of funds into these investment vehicles. The fund also invests in cash such as the Federated Hermes US Treasury Cash Reserves Fund. The statement of assets and liabilities gives a snapshot of what the fund owns and owes. As of March, the fund's total assets were about $8 million with liabilities of about $155,000, leaving a net asset value of roughly $7.87 million. The statement of operations details the fund's income and expenses for the year. The fund had a net increase in net assets of $368, resulting from operations, which includes investment income and realized and unrealized gains. The statements of changes in net assets shows how the fund's net assets have changed over time. From the start of operations in March of 2024 to the end of March, the net assets increased by over $3 million. Then from March to March of 2025, they increased by over $4.7 million. The financial highlights section provides key per share data and ratios. For the founder class, the net asset value increased from $10.21 to $10.82 Shin during the year, with a total return of 7.67%. The investor class wasn't doing too well, with negative 0.16%. Note 1 describes the fund's organization and registration as a Delaware statutory trust, registered under the Investment Company Act of 1940. In other words, this fund follows rules and regulations as set forth by the government. Note 2 outlines the fund's significant accounting policies, including how it values investments, uses estimates, and handles security transactions. The advisor earns an advisory fee calculated daily and paid monthly at an annual rate of 0.75% of the fund's average daily net assets. Investor class shares are subject to a 0.25% shareholder servicing fee and a 2.00% redemption fee on shares held less than 12 months. This note explains how the fund determines the fair value of its investments. It breaks down the valuation hierarchy into 3 levels based on the transparency and observability of the inputs used. It depends on whether the fund is using things like real market prices, things that are kind of market-based but not really, or things that they pull completely out of thin air. Note 6 dives into the fund's federal income tax information, including its intention to comply with regulations to avoid paying federal income or excise taxes. The fund has an unlimited amount of shares of beneficial interest and 727,251 shares issued and outstanding. The fund offers quarterly repurchase offers, typically for no less than 5% of the fund's shares outstanding. They did a repurchase for the founders class and had it at 10/43 for the NIV. The percentage of shares tendered that were repurchased was 0.02%, which is tiny. That means practically no one really wanted to pull their money out. The portfolio manager has ownership and financial interests in and may receive compensation and or variable profit distributions from the advisor based on the advisor's financial performance, such as its overall revenues and profitability. In other words, the better the company does, the more the executives get paid. This incentivizes them to do a good job managing the fund. Lastly, the report confirms that the fund's disclosure controls and procedures are effective and that there were no significant changes to internal controls that could impact financial reporting. In other words, they're saying that they're doing a good job and there's no need for the SEC to worry. Now, looking at these results more broadly, it is a bit difficult to assess this company since it is a very new fund. But the fact that the company underperformed all the indexes means there is probably something to worry about, especially considering the fact that it says it allocates 20% into cash and fixed income, which should help it outperform in downtimes. It would be interesting to check in on this fund a few years later to see whether it will actually work out. Alright, that's our breakdown of Institutional Investment Strategy Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.